Good afternoon, everyone. Actually, good noontime, lunchtime here. Welcome to our Advanced Masters Coaching Program. This is our pilot preview, and with Michael Schulman here on July 29, 2014. Again, I'm Dave Durham with Traders Reserve. We're glad you could join us for this pilot program. This is a good chance for you to get a preview of what's coming up for the next 4 weeks in the program. Michael's excited to have you guys back again, of our students from the first six-figure portfolio coaching program. So, Michael, I'm going to turn it over to you.
Hi, thanks everybody for showing up. Noontime. It's Tuesday here in Washington, D.C. Your tax dollars are flowing here, so you can come in and watch them. I'll be brief to the point, and then we'll go to a couple of trades. And as you all know, we were quite successful as a group, and I'm not saying that even I was surprised by the amount of success we had, and more importantly, the lack of difficulty we had in managing positions in the first coaching trading session. And I think part of it was the commitment to process and to thinking things through. We're going to review the pilot program. We'll go over actually maybe two tactics. It's sort of one tactic and an old tactic that you're familiar with, two different trades, and the housekeeping is just a reminder about what we'll be doing next week. This pilot program will be hopefully the basis of a longer program, but as with everything, you want to get people's feedback. You want to come to understand what you're communicating properly, what you're not communicating properly. I know these trades work. I've done them in my own portfolio. That's not what we're sort of working out. It's a matter of how you're reacting to things, and that includes some advanced tactics we haven't even touched before. There'll be a larger bullpen. I think that my bullpen is typically 25 stocks, and I've just traded 2 in and put 2 new ones in. But we'll be going over my prospect list as well because of the nature of some of the trades we want to do. The stocks just simply aren't there in the bullpen. I've reconfigured, not reconfigured, I've added to the calculators, the position calculator, the income calculator, and what I've done is integrated the two, so it's a little bit easier. I've also I had abandoned an attempt to do a tracking spreadsheet. It's just too hard. People typically track their own things their own way. And there's a new tracking calculator that will let you keep track of a trade and not have your eyeballs fall out of your head trying to figure out whether you've made a profit or not. Special topics, typical question, what do we do in a correction, things like that. And in addition to tactics, there are 4 strategies that we're going to discuss, which you'll see in a minute. Of course, questions and answered, and I love your emails. We're basically following a pyramid approach or a stepped approach, from your basic income needs. You came into Options Income Blueprint. Hopefully you've made a lot of money. Hopefully you made even more money in six-figure portfolio coaching. Our average annualized return was off the charts, and I'm not suggesting we're going to replicate exactly what we did then. But the Advanced Masters program is two things are distinctly different. We will even be more aggressive with the same level of capital risk. Everything is, with the same level of capital risk. But more aggressive really means more creative, looking more at events, looking more at doing things you haven't done before. But the other thing is, if you have followed some of my advice, or if you've been doing something you've been doing all along, and you have a basket, a bullpen, whatever, of stocks you're familiar with or becoming familiar with, the Advanced Masters program will give you some different trading tactics to trade them, which will hopefully give you higher returns than you're currently experiencing, but also sometimes a simple put or a simple call or a double dividend trade or some of the things we explored before just don't fit that week or that month or that quarter, and some of these advanced tactics will. So in addition to hopefully getting you perhaps better returns than we've seen in the past, this will give you a larger set of tools and tactics to approach the stocks that you already know. I'll recap for 15 seconds of what we all know together. I do fundamentals. I look at a trend. From the trend comes stocks and bullpen stocks, and then we buy the shares or we sell puts. We buy the shares, sell calls, or then we just sell puts. And among the mix is our dividend stocks. The trends, there are 7. You're probably familiar with them from reading Options Income Blueprint. I'm not going to read my chart. There's an 8th one brewing, and that's what I call the top 20%, meaning the economy has now freed up the top 20% of income earners into becoming people spending to satisfy more of their wants than their needs. It's a very, very important distinction. One of the two trades we have today is a want stock. It's about people doing and spending 100%, well, 98% discretionary income, and it's not categorized on Wall Street that way, and it cuts across everything from home renovation and repair with a Sub-Zero rather than a GE refrigerator, and the new American kitchen to buying Movial copper pots at Williams-Sonoma rather than the discounted pots at Target. This is an important thing, and it may be an eighth trend. Seven's a lucky number, but we might go to 8, and I'll be discussing these in the next month. The program itself, you're my income masters. You're the guys, you're the gals, you're the men and women, excuse me, gentlemen and ladies. And one of the things that we do is we look at a universe of stocks, yours plus mine, or just yours, and then we look at trading tactics. And from that, calls, puts, and execution. What will be different this time, and I'm repeating myself, larger universe of stocks, more diverse and more complex series of trading tactics, but the heart of it is still selling a call, selling a put, and executing. It's just doing it in a different and more aggressive way. And here they are. You are familiar with some of these names. I'm going to review these one by one, but here's a nice layout, and you can see we're talking about tactics, calls, and puts, and then there'll be parts of each session of the sessions we're doing together dedicated towards strategies. And again, I'm going to review each of these on its own slide, but I wanted to put up on one slide to see you there's a richness, there's a fabric here that together you and I are going to weave this fabric into trades every single week. Covered combo you're familiar with, and in fact we're going to put on a covered combo trade today, hopefully, depending on how the market's doing, and we're going to follow it during the whole time we're together, which is something we didn't do last time, and I really want to do it this time because it goes back to convincing you about the long-term value of a stock that you may go in and out of and how to track it. And covered combo is you're selling a put, you're accepting shares, you're selling, if the put expires worthless, you're selling it again, you accept the shares, you sell calls, you get called out. It's straightforward. Hyper puts and hyper calls, and a trade tonight, which is Expedia, is a variation of that. It's both what I call a lockdown cash trade, which we'll look at in a moment, and a hyper put and a hyper call. So what's a hyper put and a hyper call? Extreme super premiums, and usually because of an event, earnings, product announcement, what have you, but mostly earnings or an FDA approval. And the way you do it is a buy right or you sell a put. And in case you're like me and you may already own the stock, you're obviously just selling a call. And you know what you're hoping to do, because it's an event, is really get called out because you want to end your exposure to the stock at the end of the event, or maybe you like the stock and you keep going. And one of the things that you'll see is before an event there are huge premiums, which means you may be able to exit the position before the event occurs with a significant profit. You're familiar with double and dividends. We're going to focus more on a triple dividend play. And I can even tell you it's probably going to be Seadrill. We'll probably put it on in 2 or 3 weeks. We're in that window. Their last ex-dividend date was second week of June, so it means the second week of September will be the next ex-dividend date. They're committed to the dividend, which is $1. The option prices do not reflect this yet, and the stock Seadrill has been under pressure. It deal with Rosneft, which is going to be hit by the sanctions against technology transfer to energy companies. It's been bouncing around, and so there's really nice premiums. There'll be others, but just want to give you a heads up. You know, you're familiar with the stock. We traded it the last time. There's weekend cash, which I've always wanted to put on. I've never been able to get it together, and maybe you'll see an alert on a Friday morning saying, "Hey, let's get together at 12 or 1 o'clock on a Friday." And I know many of you, regardless of my admonition to break down silos, still have stocks you don't sell calls against. Fair enough, but this may be for you because there are many stocks, a zillion stocks, that Friday afternoon at 12 or 1 o'clock, if it's a weekly or maybe in the third Friday of the month, you can sell a call that has very little, if any, hope of being exercised. And if you do it on a regular basis, 40 or 50 times a year on a weekly, you can pick up a 5 to 10% return on an otherwise dormant asset or an asset that you're not using otherwise to generate income. The free money trade was the last trade we did. It was sort of an experimental trade in the last coaching program, if you remember. It was the United States Steel Leap, which we sold a call against. And I did it. I put a contract in my own portfolio, and I didn't wait for the leap to expire next year or whatever. I closed out the position with a profit. I'm assuming you did too. The free money trade is just that. It's not just this marketing name. If you buy a leap and you buy the right one, and there's enough premium on the calls, as there was actually in U.S. Steel and there are many other stocks, if you can sell weeklies within 3 to 6 months, the cash that you've generated, if you do it right, will actually have averaged down your cost of the leap to zero. And with a monthly, it might be 6 to 9 months. And the bottom line is, I want you to envision and imagine what it is like to have an asset that is on a zero cost basis, and what you can do with it in terms of selling calls and so forth and so on. It's fun, but it's also quite real. Correction cash is just that. There are corrections in the market, which we haven't suffered in a while. We had a mini little sell-off in the NASDAQ for about 5 seconds earlier in the year, and January was a very rough month for a variety of reasons. A typical correction is coming from an exogenous event, the lunatics in Congress saying we're not going to pay the national debt and we're going to shut the government down, or a market-based downturn due to the market not liking something, or just internal technicals lead to a sell-off. And a correction is typically viewed as 10 to 20%. In an exogenous event, you sell puts on commodity ETFs and you sell puts on inverse ETFs, single inverse ETFs. When a market-based downturn, you're selling puts on inverse ETFs both at the index level and at the sector level. And we're going to cover this. And I hope we don't have a correction in the middle of the course, but if we do, as many of you have heard me say, in the summer of 2011 was the most money on a weekly basis we ever made in Options Income Blueprint. Selling monthlies actually, but closing them in 2 or 3 days. Daily cash call is sort of a liberal term for a stock you already own, and you're sort of day trading the calls, or a stock you buy with the purpose of day trading the call, buying the call back, and then selling the shares. And it's a loose term. It doesn't have to happen in the same day. It can happen in a 24 to 48 hour period. For example, I put on in my own portfolio a General Motors trade last Friday at about 3:45, hoping to get out on Monday, and I didn't. But I love General Motors stock, and it's no big deal, and it's a very, very lucrative trade. And the bottom line is, we didn't get around to specifically doing these. We could have done them. There were a couple of trades in the original coaching program that I think were 3 days long, so they sort of come close to this. But this will be something I am always looking for. Lockdown cash is one of the trades we're going to do today. A very volatile stock, either because it's a very volatile stock, or in the case of Expedia, it's because earnings are coming up on July 31st. And what you do is you sell a very deep in the money call, and you want to be called out, and you generate a huge amount of cash. And what it lets you do, 2 things. It's the equivalent of a put. Well, 3 things. It's the equivalent of a put, and we'll go over this. If you like the stock, you're already owning it, or you decide you like it, you can buy back the call, because you're going to get ferocious time decay in a lot of cases in a 72 to 24 hour period leading up to earnings, or let's say a week. We're doing this very close to the earnings date. And the other thing is, should the stock blow up, should you be wrong about where earnings are going and you own the shares, you now have a lot of cash that's averaging down your cost of owning the shares, which you will see when I go to the example. Those were tactics. There were 4 kinds of strategic things, process flows, that I want to cover in the coming month. And this is one of the reasons we have a pilot program. I want to see what level of interest and what level of enthusiasm and what level of sort of acceptance of this. It all starts, of course, with income needs. And you have your current portfolio, and I'm assuming, as I said, not all of you have broken down your silos, and you don't have 90, you don't have all your assets geared towards income. This is a discussion of how to transition a portfolio and make money all along the way. So a fixed date from now in the future, you still have your growth stocks and your stocks that you're going to appreciate, hopefully in a wonderful way, but they're throwing off income by selling calls. Recovery trading is, parts of your portfolio down, and I've actually had a bloody ugly month. I own GTAT, which is down from 19 to 13.5, and I own Whole Foods Market. I bought it at 59 and it's at 37. And I'm selling calls, every week, and I'm fine. But that's not what this is about. That is another series of strategies. This is when a part of your portfolio has been hit. Either the market just turned against you suddenly or something went wrong. And so the question is, can you do something in a temporal fashion? Can you change your trading style for 30 to 90 days, for 30 to 180 days, for 1 to 90 days? That while you're still protecting your capital, not engaging in any more capital risk, you can accelerate some things that you normally wouldn't do. You're not comfortable with, trying to make up some lost ground. And that means using leverage. It might mean using margin, which is, I don't believe using on puts. I only believe in using them on covered shares and covered calls. Using leaps, using with greater frequency weeklies and day trading, making a bigger time commitment to doing this. And we're going to cover a bunch of tactics to rebound your portfolio, not individual position. Correction trading, as opposed to the specific tactic that I called correction cash, is multi-parts, has multiple components. One is you protect your assets, your capital, you generate income. I mean, those are the two things that you want to do. The first thing you have to do is put in place defensive tactics to hedge your assets and to protect yourself during a downturn. And I'm not going to get into buying puts, but there'll be questions about it. And when you hedge a position, theoretically, you're selling a call and using the cash to buy a put. That's a simple way to do it. There are other ways to do it that can generate income. And then, because the market's going down, remember, volatility will be going up. It means premiums will expand, and this is something to be exploited aggressively. And if it's a stock picker's correction, then it's heaven. It's just pure heaven. If it's one of those corrections, especially an exogenous financial event, which it's hard to anticipate one happening, then all the indices would come down simultaneously. But this will go over the tactic you use to exploit fear and to be very aggressive. And you put the whole package together with a series of tactics, depending upon the nature of the correction, that you can put in place. The runaway put and the runaway call, I think we're all familiar with. I have a couple of runaway positions. I personally, when a put's running away from me, I typically accept shares. And the reason I do so is, over the long haul, you're going to be able to generate more cash from selling calls on a stock than you will by rolling a deep in the money put, because there's just not a lot of extra cash generated week by week or month by month. And the bottom line is you have to make that decision. We can go over some simple math, and the bottom line is there are tactics. Sometimes they're kind of complex, using leaps, and there are tactics that you can do to change the way you allocate capital towards a position if you treat the position holistically. This is one of the reasons I've changed I'm going to put a new calculator out. The calculator is not a position calculator getting in. It's a tracking calculator to show you, how am I really doing? Because that's vital when you're managing a runaway put or a runaway call. For example, I've sold Gilead 90s for this week, and of course the stock, I think, is near 92 right now. We'll find out in a moment. And I'm not worried about it. I have I can roll them. The stock may come down by Friday, or I'll just accept share. I'll just be called out and buy them back on Monday morning. And so I'm prepared for that. And these are if it went to 100 this week, I'd be really unhappy. But there are tactics to take care of that situation. Now let's take a look at what we're going to do today. And as with the coaching program, this is about a tactic, and we're going to go out to the web and to a site. But this is also about potential trades for you to implement. Lockdown cash and what I call a hypercall, and it's Expedia. Their earnings come out in a couple of days. The competitors' earnings, specifically Orbitz, was solid. European consumers are flying again, and it's a big growth part of their business. Asia is as well. And Asia has not been as down in terms of the economy as Europe has been. Higher airfares and hotel prices, which are not restricting travel, it means more business people are traveling, help because they're getting a percentage when they do things. And it also drives people to buy more of the specials, meaning Expedia owns a whole bunch of sites. And you will often see an Expedia special. It means Expedia has already purchased the room. They have guaranteed payment, and they're going to try to make as much money. And often it's a long-term contract. These are not surplus rooms like you would see in Priceline, meaning a hotel in Budapest or a hotel in Venice or a hotel in Chicago will have a certain financial goal for a quarter or a year, and they'll bulk sell a certain amount to travel aggregators. This is common in Europe. It's not common in the United States, and Expedia does it very, very well. Play here is a very deep in the money call. And before, we're just about to go out to the site, but you can see this is the 6-month chart. It's very volatile. We're nearing the top. And this is the trade as it existed an hour ago when I wrote this up. And we're going to take a look at the numbers in 2 seconds. You're going to buy the shares at market, and then you're going to buy them at $80.60, and then you're going to sell a $75 call because this is a short-term position. Last time I looked, you'll get between 720 and 750. At 720, you have a profit of $1.60 if you're called out. Well, you can do the math. That's $80 in cash if you did this 50 times a year on an $80 stock. Rather than go to the position calculator, which you're familiar with, I'm just keeping it simple. Now, if the stock blows up, your cost basis has been reduced down to $73.10, and that's an almost 10% decline in the stock. So if you go back, yeah, it could decline, but take a look. I mean, right around here, you're looking at where this thing stabilized. You have a lot of downside protection. So there's a lot going on here that's positive. So let's go out and see, and let me know if this doesn't appear. This should be an Expedia chart. And since no one's complaining, I assume it's up. Let's see where the stock is now. Basically hasn't moved, so I'm guessing these chains are the same. We're going to August week 1, the 75. Oh, it's gone up a little bit. So that's pretty cool. So that's even cooler. So now you're almost for certain going to get $7.50. Well, this is a great trade. I'm going to go right back. This is a trade you should make. You buy the shares at market at $80.88. And you go ahead and you sell the call. The numbers, the profit return are roughly going to be the same. The original math I did was 80.60. It's 28 cents more expensive, but you're probably going to get another 20 or 30 cents on the call you sell. It's going to even out from the numbers. So let me go back to the PowerPoint chart. Excuse me. Google Hangout is wonderful, but going in between screens does take a little bit of effort. And I'm still keeping my fingers crossed. I'm trying to get a tour of the Google campus. I'm out on the West Coast next week. Bottom line here is these are the numbers. They're rough. They're going to be roughly the same as you just saw. This is new. I mean, but the word lockdown means you've locked down one of two things. You have locked down an enormous profit, and you know you're going to be called out if the stock is 75.50 or more. So you're out of the trade. If for some reason, and I think Expedia's earnings will beat or surpass, but let's say I'm wrong. It does happen. It's just sometimes I get the numbers right, but I don't know what the Wall Street Whisper numbers are. Because you can go to a site that says Whisper estimates, but that doesn't mean they know what they're doing either. And the bottom line is you're going to have a cost basis of $73.10. Now it's going to be about $73.40 because the stock's up a little bit since I did this. It's almost a 10% downturn in the shares, which we saw on the 6-month chart. It should give you enormous downside protection, which is always the thing you're worried about, protecting your capital. So this is a good deal. This is a really, really, really nice trade. Now what I want to do is go to an old name with a new name, Gilead, a covered combo trade. And I'm sure you're saying, he's doing Gilead again. Trust me, this is the trade we're going to work for the next 3 or 4 weeks. This is a heaven-sent opportunity. And I want you to understand that everybody's reacting, including a very good friend of mine who is a PhD economist and a very well-respected guy who runs a firm that sells their research to Wall Street. And he's nervous about Gilead because of the headlines. And he has analysts on his staff that analyze rulings and things like that. And the Financial Times had a great piece today. There's a new combo version of Sovaldi, the runaway drug, that is being worked on, which would eliminate the need for interferon. And I think it goes for approval in December, or results are in December. It's going to be within the window will be next 6 to 18 months. And the bottom line is it cements their position in the marketplace, and all the headline risk that you're seeing with Sovaldi has just created richer premiums for the options. It is not risk to the business. And as you know, I own shares. Here's the chart, and you can see up here we're beginning to break out. The traders are leaving the stock. They traded the headlines. They traded earnings. Earnings came in. They were blowout, but they were priced into the shares. Traders were a little disappointed. They're gone. And now the investors are coming in because Gilead is selling at a serious discount. It might be more than 30% to the S&P 500 based on forward earnings, which of course is insane. and traders and investors know that. So let's go back out. Well, let's go to see what the trade is. Oops, I didn't specify it because I did want to look. Where am I? Let's go see what we should do. Because you're familiar with this Expedia, you weren't necessarily. I laid it out a little bit more clearly. So let's look at today's chart. Let me know if this doesn't appear. But so far, no one's squawking. So as you can see, it's run into some resistance at 93 on a daily chart. And it's got a lot of support. That's a daily. Let's look at the 5-day. And you can see support keeps on edging up. First you had it here, then you have it there. We'll go to 10-day, which includes the earnings announcement. This is all good news. You know, there's decreasing volume over time because, as I said, the traders are leaving and the investors are coming back. So what you want to do here is this is a covered combo trade, meaning we want to be put the shares. We want to collect the premium from selling a put and use that to cost average down the basis of the shares, and that gives us more flexibility when selling calls. Let's look at two different ones. Right here we're in August. Those expire on August 15th. That's 2 weeks from Friday. So if you sold in 94, you would get $2.60, let's say $2.60. So that means you're paying $91.40. That's 94 minus $2.60. You're getting the stock, if you put the shares, at a $1.30 discount. Okay, but let's look at it another way in case the stock rises and goes above 94. What you're looking at here is you're getting $2.60 on a $9,400 investment. We're going to do simple math here. Let's multiply the 260 times 17, which is the number. I'm not going to go to the calculator. You know, 17 times $2.60 is about $44.50 roughly. That's about a 45 to 48% return if you're not put the shares. Now, if you're put the shares, we're going to turn around, obviously, and we're going to sell them. But you have a cost basis that would be down below 92, which means you could sell a $92 call. You see where I'm going with the cover combo? And let's take it the week ones, which is the week we're in if you want something short term, and see what it looks like here. Let's say you sold a $93 put. You're going to get $1. Okay. Now, that means you're paying, if you put the shares, you're going to be paying $92 for $92.79 stock. And that's a very good deal. And if it expires worthless, well, you can do this math. It's $1 times 50, it's $50. So you have approximately a 60%, 58 to 60% annualized return. Well, let's turn around and buy the shares. Let's do $92.79, and you would normally sell a traditional call, and look how they're priced. At $92.79, you could sell a call, let's say you get the low end 75 cents. Multiply that by 50, that's $38. If you're not called out, you have over 40% annualized return. If you are called out, you have close to a 50% annualized return. Very old-fashioned, straightforward call. Well, let's take a look at this. Let's say you're a short-term guy or a short-term gal, or a lady or a gentleman, or a man or a woman, or female and a male, and you want to get called out. So you go back to the chart, and you're going to go, well, where should I take a stand? And it's hard to tell. Excuse me. It's hard to tell because of the way the traders are leaving. The old metric doesn't necessarily hold, you know, as much as it could. And if you go to a month, it doesn't matter in a certain sense because now you're going down to 90. So let's go back to the chain and go back to week one. So you have a couple of choices. And I'm going to take a look at the 92. Let's say you sold the 92. You're going to be called out 92. That means you're going to sell us for, let's say, $1.35. Okay? And you're going to lose 79. If you called out 92, you lose 79 cents, right? You bought it for $92.79. You're selling it for 92. But you have $1.35. $1.35 minus your 79-cent loss, you have a gain of about 56 cents. That's a modest return of about 30% a year, so that doesn't look very good. So the trade here is if you wanted to own the shares, you might go back to August and see what's going on here. If you bought the shares at 92.79 and you sold at 92.50, aha. If you sold at 92.50 and you are called out, okay, you're going to lose 29 cents, but you have $2.05 here. So let's say total, you've made $1.75, okay, on the trade. And I'm not asking you to follow the math, just take my word for it now because this is just a preview session. $1.75 times 17, it's still not a very good trade. So the trade here are puts. You want to sell an in the money put, which is, I thought we would come to that conclusion because this is a covered combo trade. So I believe the trade here is really to sell the $93 put and accept the shares if put, and if the stock moves to the rest of the week, you have a fabulous return of $1 in a week, which is almost 60% a year. So the Gilead trade is to sell right now the August week 1 $93 put, $93 a contract, and as I always say in my alerts, you have to be willing to own the shares at $93. So really, those are the two things that we're talking about. We want to sell the Gilead $93 put, and I'm going to go back to Expedia, which was a more complex trade, and we'll review that screen again, and then we'll move on to a wrap-up. Where am I? And this is the Expedia trade, which is to buy the shares at market, sell a $75 call. Remember, earnings are coming out on the 31st. If you don't want to be exposed to earnings, don't do the trade. These are the relative numbers as of 10 minutes ago.
Michael, you have the PowerPoint up there. You need the
PowerPoint's not up.
No, the PowerPoint's up.
Yeah, that's the PowerPoint is up.
Okay, it's on outline, so we're not seeing the actual trade.
Here we go. PowerPoint slideshow. There we go. Sorry about that. Is it up now?
Yes, it is.
Okay. So here's the specifics, and this is coaching. This isn't hard and fast recommendation for those of you who are comfortable with this, but this is a great way to play an event because you're taking this hyper call and you're using it to potentially have like we had over 100% potential return if the stock goes up, but we've also protected ourselves almost 10% to the downside should the stock sell off. You can see the new cost basis. So these kind of premiums, now you have to use limit orders. There's not too many people here in the session. I don't think we're going to disturb the option price because it's a low volume option in a given day. There's enough open contracts that can be traded. But so you're protecting yourself on the downside as well as enjoying the potential of a great upside. It's a very, very slick trade. And it's the kind of thing that we're going to be doing over the coming weeks. So let's go to wrapping up a little bit and then questions. There's a glimpse into the program. And you're going to see in the coming weeks, it's a pilot program in terms of communication, especially on the strategy side, but it's not pilot in terms of the tactics. I've been using them. I think you'll enjoy a whole bunch of new names of stocks which you haven't seen before that are not necessarily in my bullpen, but are prospects and are better suited, like Expedia, for example. Expedia is part of the 20% spenders that I'm looking on as an eighth trend. And we will, as we did last time, we'll always review past trades. We will have trade recommendations the evening of the session, and then we will put them on the next morning through an alert, and then we'll also have live trading sessions. So there'll be plenty of trades. I think we averaged 3.5 a week in the last session, maybe probably a little bit more now. And there'll always be time for Q&A and email. So Dave, I'll turn it back to you to see if people have questions.
Okay, if you go ahead and start asking your questions in the chat box. We have the chat box up, and we'll take them as the order they start coming in here. Don't see any questions yet, but I'm sure they're coming in.
Maybe I was so crystal clear I didn't confuse anybody this time.
No, takes a few seconds here.
I'm kidding. I always manage to confuse somebody.
Michael, Ann asked, could you just review the GILD trade again?
Sure. No problem.
Great. Thank you.
I didn't, because we're so familiar with it and I wanted to keep this as a preview, I didn't write it up, and let me apologize if that was inconvenient for you, but let me go back to the screens and we'll go over it again. So let's refresh this. The stock is trading at 92.78. Okay, let's look at the chart, and you can see it's breaking out. And, it's my opinion. You might argue with me because it's bumping up a little bit here. It'll bump up at all these price points because they're options traders mixed in with investors. But down here, I see this as clearing 92. Even if it retraces to 92, I get a sense from reduced volume that traders are leaving the stock and investors are coming in. And you have to remember the stock on a fundamental basis is extremely undervalued, and the traders themselves are leaving and giving room for investors. So that's the backdrop. So it's a bullish case. I want to be accepted the shares. I'm hoping that I get the shares because I think this is going to continue to run. So I reviewed a whole bunch of positions, and what I opted to recommend was we're in August week 1, expires this Friday, this weekend, and I recommended selling the $93 put. That means you're 21 cents, okay, in the money, and the put you can probably get $1. Now I was going quickly. I'll slow down. The rate of return, if the stock closes above 93 and change, and someone's not trying to call it, doesn't put you the shares, $1 annualized over the course of a year is $50, and $50 on a $93 stock is approximately 58, I think, percent return. More importantly, which I did not mention, which was a bad on my part, this is carrying a premium there's a premium. This has 21 cents real value, 22. It's $93. The stock is 78 cents. So the real value of this is 22 cents, meaning the hardcore value if you will put the shares right now. If someone bought the shares at $92.78 and then turned around and sold them to you at $93, they make a 22-cent profit. Well, that means there's almost 80 cents of time value left in the put for the following 3.5 days. That's a lot of money. And what it means is if the stock stays stable, tomorrow, let's say the stock doesn't move. Tomorrow this is going to be 80 cents, maybe 75. And on Thursday it's going to be 50 cents, maybe 40. And you get a chance to buy these back. You don't have to worry, about what do I do on Friday afternoon. If the stock does not move, or if the stock goes up, these will continue to degrade in value at a Rebbe rapid clip. This is a 3.5-day trade. And I didn't mention it. I just assumed you were all comfortable with that, but the question's a fair one, so I'm slowing down a little bit. So you're having not a risk, because I think the stock is a bargain at 93, but let's say you disagree with me, and let's say you're a straight put seller and you don't want to own the shares. You still have a very high probability of being able to sell, to buy back the put sometime between now and the close. But the steps are to sell the $93 Gilead put. Remember, you got to be willing to own it at $93, and it's $9,300 in capital. And put a limit order in. Start at $1, but 95 cents and $1 are close enough. So if the limit order is not going off, you should try market orders.
Okay. Michael, Richard asks, and I'll just, what kind of teaching schedule is planned for the master's course? Basically, for this pilot session, there'll be 2 live coaching sessions. One is next Tuesday, August 5th at 7:30, just like we had done with the live coaching before. Then we're going to do a wrap-up review session at the end of this pilot program 4 weeks from now, scheduled for September 3rd. Again, it'll be at 7:30, so we'll have those 2 sessions then. But then the majority of the sessions will be live trading sessions during the day that we will put out a schedule each week on to let you know when those will be. We'll put a schedule out on Monday and letting you know that we'll be meeting on Tuesday at noon or Thursday at 11 o'clock or even a Friday afternoon session. And we may have a few surprise sessions, as Michael was saying before. So I hope that answers that question. And also for anybody who's not yet signed up yet, we know a lot of people have now. I've just posted a link where you can get signed up. Our deadline is tonight for the Master's Pilot Program, tonight at midnight, and we'd love to see everybody come in here. We know most of you have joined this program. Let's see what else we have. Michael, Phil actually did the Expedia trade for an annualized equivalent of 102% if called out. So
go Phil. Now let's hope the earnings come through, or let's hope the earnings don't come through. I mean, this is what I mean. You're protected on both sides, but I'm by the way, for purposes of full disclosure, I use Expedia, so I'm real curious how their quarter has been. Just as an aside, people are worried about Airbnb, competing with their business, and more and more of the airline travel sites offer hotels. I think sort of it's not really an issue. And please remember, if Airbnb, this sounds pretty pompous of me, but if they ever get to be a big problem, Expedia will just buy them, or Orbitz, well, someone will buy them. So I think this is going to be a good quarter for them. I think business is picked up, and we'll see.
Okay, and then yeah, the again from the master's program, that's the live. This pilot session is the 4 weeks. We have the live tactics coaching session starting next Tuesday at 7:30, and then again the live trading sessions over this time, the review session. Plus you have access to the member site where Michael will be posting not only the recordings of all the sessions, but the some of the other new calculators and material that we have to share with you and everything as well. And of course, this kind of session where you can ask questions of Michael. During the trading session like we've done, where he'll take you through the training here, and then also as we get to the trades, it's a great chance for everybody to ask questions for that. Michael, I'm not seeing any more, although Ann also did the Expedia trade, so it sounds like people are jumping on that. We can wait here a few more minutes, see if anybody else has any more trades. Again, I'll just add, if you haven't come into the pilot program tonight at midnight is the deadline. And we'd love to get started next Tuesday. We'll put out an email on Monday with the schedule for next week. And Michael will be coming out to us live from San Francisco, which will be exciting. And hopefully you'll get that tour of the Google factory as well, or the Google offices.
Well, it's sort of a factory. It's an idea factory. In fact, my personal tour guide, who's an acquaintance, it's a close friend's prospective son-in-law, just got called out of town in business. So now I'm working over the investor relations staff to try to get. They give tours all the time for people like me, but they're kind of boring. So I'm hopefully we'll get there. But it's supposedly, just an outrageous place, and I'm sort of a voyeur's interest in sort of just seeing how the campus operates. But if I don't get there, there's plenty of other people I'll be picking their brain about sort of what's going on out there, because there's always something going on out on the West Coast that is going to percolate up into a stock.
Okay, well, it looks like everybody's doing the Expedia trade, so we'll have a lot to talk about next week. We can run a poll on that too to see how it's going, and then also we'll continue to follow you write your covered combo trade with Gilead. That'll be exciting to this 4 weeks as well. So, Michael, I don't see any more questions. People are just chiming in with their trades. Again, deadlines tonight. I've posted the link there, so you can actually, if you haven't had a chance to register yet, to get in, we'll allow people until tonight. And otherwise, we look forward to seeing everybody next week. Michael, any last thoughts that you want to add?
No, I do appreciate you coming back and helping me out with this, and hopefully I'm helping you out with some profitable trades. It's very gratifying. And the only thing to remember that if something seems too new to you, don't worry about it being too new to you. I got an email, somebody thought something I've been working on is a friend who said it's just not. I turned him over to a virtual trading site to just go ahead and practice. I think you're probably beyond that, but always ask questions if you're nervous about some of the dynamics of a trade, and I'm always answering my email. So thanks again for coming.
And then everybody, again, Ann just asked, next, even though the pilot program starts on August 3rd, the actual first session is Tuesday, August 5th at 7:30. So that's on the website. You'll see that, and I just posted that back there as well. So thank you, everyone, and have a good afternoon.
Thank you. Are we off the air?
Just finishing up here.